Hello everyone and welcome to the special webinar on cash flow management during times of crises. My name is Praseeda Nair and I'm the editorial director of Real Business. We're joined today by a very illustrious panel of business owners and business solutions providers to discuss this hot button issue. With the COVID-19 crisis having initiated such a dramatic change to the working world almost overnight, a majority of organizations have had to begin remote working without warning, having to rapidly transform business models to maintain operational continuity and cash flow. Cash flow was always an issue for most businesses before the coronavirus. Last year, research found that UK SMEs were owed over £34 billion in late payments, with an average debt owed of £34,286 per company. These delays prevent small business owners from paying their own creditors as well as fixed overheads like rent and staff salaries. So now, in light of the fact that coronavirus is set to have a significant and prolonged impact on business sales, the challenges of paying your creditors and overheads and keeping cash flow under control is going to increase. To help you deal with these issues, we've brought a panel of business experts together. Joining me this afternoon is Helen Priestman, Charlie Mullins, and John Stapleton. Hi, everyone.
Good morning.
Hello.
Helen joins us from Bottomline. Helen, can you please tell us a little bit about yourself and Bottomline Technologies?
Yeah, of course. Thanks for the introduction. Good morning, everyone. Great to be here today, and also a good excuse to get out of my loungewear and put some makeup on. So I'm Helen Priestman and manage Bottomline Small Business Payment Services. So for those who don't know Bottomline, we're an innovator in business payment automation technology. So our services include fraud and cyber risk management, digital banking solutions, financial document automation and messaging, and payments and cash management. So we've got over 600,000 organisations using our solutions globally. That's across 92 countries. So we process billions of invoices, complete trillions of dollars worth of payments. In the UK, our PTX solution, that's what helps to make complex business payments simple and secure for our smaller businesses. So this can include accounts receivable solutions, so to collect recurring and one-off payments, whether that be direct debit, cards, or newer methods, as brought about by the government's Open Banking initiative. That's also combined with accounts payable solutions for outbound payroll and supplier payments. But with PTX, it's all in one single platform, so it helps move money quicker, easier, more securely, whilst also providing complete visibility. So for the last 13 years now, I've been helping small to medium-sized businesses getting access to various payment schemes, such as Back's direct debit. So in a bid to reduce businesses' late payments, improve attrition rates, and help automate their payment processes. So we solve some of businesses' key challenges in increasing efficiency by reducing some of the manual operational processes, supporting growth, simplifying complex payment compliance, and also supporting a transition in moving to a digital and online self-service business where required.
Okay, wow, that sounds like a lot of things that could resonate with our audience right now, going digital, all these hot button issues. Thank
Absolutely.
you. So our next panelist this afternoon is no stranger to adversity. Charlie Mullins, hello.
Hi there. Good morning. Thanks for having us on here. Wish it was better circumstances, but it is what it is. Been in business since 1979. We're the UK's largest independent plumbing and service company, and we employ about 450 people with a turnover of about 45 mil at the moment. You know, we cover all of London and now out to the Greater London, and we also do all different trades, you know, besides the plumbing, heating and all home trades. And, you know, I have to say, up until, you know, this unfortunate situation that we're in at the moment, business has gone from strength to strength, but what a challenging time it is at the moment.
Wow, I'm sure a lot of people would love to hear about that in detail, because it's always, you know, leaders like yourselves and John, our next speaker as well, that can possibly inspire us in this time. Thank you. So our next panelist is another big name in business, as I mentioned, John Stapleton. Hi, John.
Hi there. Thanks for the introduction. Listen, I'll keep it brief, but I got to cram, I guess, 35 years of being involved in the food and drink industry into a few minutes. And so very quickly, I've set up a number of businesses over this time period. Way back in 1987 was the first one. That was New Covent Garden Soup Company. We set that business up. Nobody made fresh soup at the time. It was the first one to bring fresh soup to the market. We had to design our own process and then design our own brand. And I guess the rest is history. We sold the business in 1998. So that was like a 10-year adventure. I then went to the States on my second adventure, which was very similar to the first, basically bringing the soup, fresh soup in the carton concept to the States. That project, unfortunately, didn't work. That was a business that didn't work. And I always claim I learned more from the failure than I did from any of the successes. But happily, that business was then followed by a third one, which was a success, and that was Little Dish. That's all about bringing healthy, convenient, tasty meals and subsequently snacks to the market, to children in particular, not babies, but let's say for 1 year up to school going age. We set that business up in 2005, after I'd come back from the States, and sold it in 2017. So that was a slightly longer project, 12 years or so. I actually live in Germany. I'm sitting here in Munich right now, and I have been since I came back from the States. So I spent a lot of time going back and forth between Munich and London, and I didn't want to be doing that forever. So I actually pulled back from my business a couple of years before we sold it. And over the course of the last 5 or 6 years, I've kind of got my hands in a lot of different pies, I suppose, fingers in lots of different pies. And I support a lot of small startup businesses, early stage growth businesses, either as an investor, an angel investor, or as a business advisor, I guess. I've got 5 or 6 businesses that I'm involved with on a very regular basis based in London. So I'm back and forth quite a bit, or I was before all this happened. Some businesses as well here where I live, and also in Ireland. You can tell I'm Irish. So I'm around and about quite a bit. I also work with Board BIA, which is the Irish Food Board, on some of their entrepreneurial programs, which is really exciting and interesting and keeps me in touch with what's going on. And lots of other things too, but maybe I'll just mention Mission Ventures, which is a business we set up a couple of years ago, and we're all about corporate venture accelerating, which really means very quickly, we work very closely with large corporates, typically in the food and drink space, and we invest on their behalf, or on both of our behalves, into early stage growth businesses in food and drink. So we help entrepreneurial businesses get started, get launched, get set up, grow, accelerate, exit. And we're an independent accelerator in the food and drink space. So, lots of things that I'm involved with. And as Charlie said, it's a really difficult situation for so many businesses, particularly small businesses. So we've been having lots of crisis meetings and strategy reviews, and I'm working through lots of plans that need to be amended, given where we now are. So thanks for the invitation, and lovely to be here, part of this panel. Hopefully I can contribute.
That sounds fantastic. Thank you. And again, so many issues. I really hope we have the time, because it'll be fascinating to hear about what you've learned so far working with all these small businesses within your networks. But moving swiftly along in the interest of time, diving right into the topic, cash flow during crises. So cash flow is pretty much the lifeblood of any business. And in the context of a pandemic, where uncertainty is the new normal, the main question at hand right now is, how can small businesses stay cash flow positive? So we surveyed our readers just as the coronavirus outbreak was gaining a foothold in the UK. It was still very new, and no one was necessarily prepared for its impact. Even so, these are the highlights of the survey. So just swiftly moving from the highlights, what we've noticed is there's a pattern that most of our readers who are small business owners say that on an average month, they have about 10 outstanding invoices. That's the majority. And they spend about 3 hours a week chasing these late payments. And they don't automate the processes, because a lot of times later on in the survey, they also revealed that there's that issue that by automating some processes, you might lose a human touch. And that's the core value and ethos that they want to bring to their clients. So I think that'll be very interesting to discuss as well later on. And another key thing is that they use backs and faster payment as a method of trying to manage their cash flow while chasing payments. So with these highlights in mind, Helen, specifically, I'd love to hear from you because of your experience working with small companies. These issues must be very top of mind for you. So what are your thoughts on this entire late payments structure. Why do you think so many small businesses are stuck chasing up to 10 invoices a month, spending 3 hours a week like this?
Yeah, I think it's something I hear on a regular basis talking to smaller businesses. I think the larger businesses pay suppliers, they feel that sometimes the smaller invoices aren't necessarily as urgent to pay. And we know that from obviously the results we've just seen, and that small businesses tend to deal with multiple unpaid invoices of smaller value. Those smaller unpaid invoices, as we know, mount up and can easily threaten the viability of the smaller business where every payment counts. I do think there's a shift with businesses at looking how they are actually giving more choice in how their customers can pay, and also at looking at ways that they can actually adopt a subscription model for the goods and services that they provide. So we're seeing a real increase in customers that may have historically just looked at one-off payments, but by looking at that subscription model, being able to spread the payments over a period. And I think from my experience as proven in the results of the survey, and as you mentioned a few moments ago, Praseeda, that 56% of those small businesses don't automate their invoicing or payment processes. So that does obviously lead to an increase in those outstanding invoices.
In terms of that automation piece, just to jump in, why do you think there's that gap? Because everyone's talking about AI, everyone's talking about making life simpler and finding technological hacks. What do you think is the bottleneck here?
I actually think the main issue is that small businesses don't actually realise that there are alternate and automated payment methods that are available to them. So traditionally, multiple payment methods and platforms have really been the luxury of the corporate. So they've got large back office teams that support both the receipt and reconciliation of the funds. And we know from those 56% of people surveyed who don't have any invoice or payment automation, what I hear a lot of is that those businesses don't necessarily know where to start. It might still be on the to-do list, and some businesses don't think that their volumes of invoices they deal with make it even worthwhile to automate the process. I also think there's definitely the perception that to adopt an automated payment process or introduce a new payment methods is a time-consuming and costly project, so requiring internal resource and development. Whereas outsourcing to, say, a managed payment provider like ourselves, we can remove the majority of that burden. So as trusted experts, our small businesses have wanted to leave us to handle their payments, so leaving them to focus on what matters most. I mean, over the last few weeks, I've seen a number of small businesses who are particularly reliant on cash collections. So as an example, your milkmen, your window cleaners, gardeners, they've almost been forced into a cashless society. So milkmen in particular, whilst struggling to cope with that additional demand for their services, many of those businesses have been totally unprepared to work in a cashless society, but they have been quickly able to adapt to accepting payments online, introducing new payment methods such as direct debit, cards, and even some newer methods through the open banking initiative as well.
Mm-hmm. Sounds interesting. It's kind of like an innovative die moment for SMEs. So Charlie, obviously you're running a massive growth business at this point, but you're very vocal about your humble beginnings and taking something so critical like plumbing services and making it like a household name. So what about yeah, please go ahead. Just want to hear your story in this context.
Yeah, I sort of started off as an apprentice plumber, and after that become self-employed. And in 1979, formed Pimlico Plumbers in the Pimlico area. And, as I said earlier, really in a way, business has gone from strength to strength. And, like these other two people here, we've gone through 2 or 3 recessions in that time. And the main recession that I remember was sort of, I think it was late 80s, early 90s. And that's when we changed our payment terms. And as I've heard Helen say this, that not so many people are using their payment terms out there, the backs and credit cards, etc. And at that time, we had a bad cash flow problem where we was invoicing all our customers. We immediately changed it from that time onwards, and therefore our cash flow, if we're doing the work, it's not a problem now. We've pretty much got 95% of our customers pay there and then, or through the backs payment. And I think that's probably the difference of us being a successful business now and not necessarily having to rely on late payment from people. So, you know, it's probably a bit of a bold thing for me to say, but I think because of the current circumstances, I think now's the time that many companies have got to change their payment system and adapt to what Helen's saying, you know, and maybe even encourage customers by making early payment, by giving them a discount. And again, I have to say, and if it's going to be late payment, then maybe, you know, they've got to be penalised for that, because so many companies go out of business because of money owing. And there's not a business person I generally speak to that doesn't suffer with it. And you mentioned that, you know, possibly 3 hours a week are spent chasing money. It's certainly a lot more than that. Even the fact that we collect a lot of hours, you know, you can't get the customer at home, or you can't get the person you need to speak to on a company to make payment. So, you know, I'd like to see it where it's introduced that, you know, most businesses should be able to have payment there and then by backs or by credit card or a bank transfer. And I think that's where we need to move into, because, you know, I hate to say it, you know, it's not going to be an easy time from now on inwards. And we certainly need to make changes. And you know, it's probably easier for me to say, because we deal with, you know, we deal more with the general public, and that doesn't make it so difficult for them to pay. But I do remember back in the sort of early 90s when, you know, it was quite difficult for them to make that payment. And I just think businesses will adapt accordingly if we pretty much bring that across the board.
Do you think it's something that could be established across sectors? Or do you think consumer-facing businesses have it easier? What are your thoughts on that?
Well, I think consumer have it easier, but there's no reason why, you know, some of these bigger companies can't pay the smaller companies a lot more quicker. You know, they do have the funds. It's not that they don't have the funds. And, you know, I think it's just something that, you know, we have an old-fashioned system still in place of allowing people 30 days, 60 days. And I just think the way the world's gone today is now the time to change it. I mean, you know, who would have ever said 20, 30 years ago that, you know, we're pretty much cash free now. So, you know, we're not relying on it. We have changed. And I just think this now needs to be adapted to as many businesses as it can. Not as easy as I'm saying, but, you know, I do believe that all the smaller businesses can adapt to that, and these big businesses that can afford it, especially government in that, you know, where you're invoicing from government or waiting. I mean, you know, let's not kid anyone, they're the ones that drag their heels a bit, and that has the knock-on effect of us having to pay other people.
Mm-hmm. John, what do you think about this topic of this domino effect?
Yeah, I mean, that's exactly what it is. It's a domino effect. And it's one thing to say, well, I can protect myself. But you need to really think about if you even as a small business decide not to pay somebody, then what's the implication of that on that business, even if they're a big business, especially if they're a small one, because it is a domino effect. If you make a decision to break the chain or delay the chain, it'll ripple through the entire economy. And I was just listening to what Charlie was saying, very interesting. I was smiling to myself about, you know, the two big recessions that you can remember, Charlie. I mean, I remember in 1991 very well. We were at Soup at the time, and then 2008, 2009, more recently, was that little dish. And there's, you know, lots of differences and similarities between those two businesses, but in the context of payments, it's really quite interesting. And let me just explain for a moment. We have customers in an FMCG world or in a food and drink world. We have customers, we have consumers, and consumers are like all of us. We go shopping to the retailers, and those retailers are our customers. We actually sell to them. We don't sell directly to the consumer, and those retailers are very strong. Very, you know, some of them have monopoly between them. The top 5, 6 major UK groceries I'm talking about here. And listen, they're very good at what they do, and without them we couldn't possibly sell our product. But the differences between, in a context of this topic, between U Covent Garden back in, let's say, the 90s and Little Dish in the noughties, is that at Newcombe Garden, it was much more manual, and it's quite difficult to manage, because if you think about it, if supplying particularly a fresh product like we were supplying, you're supplying 7 days a week to probably 10 or 15 depots per retailer, and they're supplying out to their stores. So you can imagine the number of transactions that there is on a daily basis if you're supplying all of these retailers times 5 to 10 depots times 7 days a week in most cases, some were 6. Number of transactions is enormous. You can't keep up with it. You would smother yourself in paperwork, and that's what was happening in the soup days. And then when I went off to the States and did that project and came back, things had changed dramatically, and everything had become automated. And we now have this integrated system where the orders come through from the retailers automatically. They go to the manufacturer as well, if you're outsourcing manufacturer, in a matter of seconds. And that generates an order book, and that gets to generate a delivery, and you have a proof of delivery at the depot, and that matches up with the invoice, and you send the invoice out the next day, or even sometimes the same day, and you get paid. And that has simplified things beyond belief, removed errors, and also removed the need to chase, in theory. The practice was, of course, you have that manual piece at the delivery point, proof of delivery. And so what really happened was we had lots of arguments with various retailers about the fact of, was there one case too little or one case too few? And what they would do on a pallet, and what they would do then is stop the entire transaction. So you weren't going to just lose the order for one case. You would lose the order for the entire consignment that went in on that pallet. And that made it very, very difficult. So, but the theory was great, and the technology had moved along. And I think there's lots of lessons for other industries in that. Like, not all industries work like this. You know, we supply constantly the same customer over and over and over on a daily basis. You know, plumbing world isn't like that at all. You're constantly, you know, searching for new customers. You're paying one-off jobs. You're moving on to the next. I'm sure you have repeat customers, but it's a much different business. So lots of industries are different, but I think the lesson there is to, you know, there's certainly automation integration systems that work best that remove all this manual intervention in theory. You've got to work on the interfaces where people do get involved. But, you know, over many years now, it's 10, 15 years in now that this system has been in place in the retail world, and it runs much more smoothly than it ever did before. So, you know, I think there are lessons, like I say, you could integrate those systems with other businesses, but there are always watch outs. And no system is ever foolproof. The day you start with it, you got to iron out the creases and make sure that the practical world follows the theory.
Mm-hmm. I think moving on, just again, conscious of time, I'm sure the Q&A portion is going to be quite exciting. So I want to give our viewers a chance to speak directly to you and ask you their questions. So just, there are a couple of solutions that people have been talking about during this specific crisis that we're in right now. The three-pronged approach of how do you have access to cash right now, whether it's through government schemes or loans. How do you manage your creditors and your debtors in this time? How do you politely chase? And how do you cut your costs and try to be as lean as possible while being sensitive? For example, furloughing staff, and that's an entire new can of worms. So I thought we could touch on three major topics that our readers have asked about specifically. One of them being, why are late payments constantly the bane of small businesses across the world, and specifically in the UK? Why is it still an issue? Why is it so crippling? And where do you start? Helen, what are your thoughts on this?
Yeah, I think, as we've heard, really, late payments is so ingrained within the smaller business that spending time, money, chasing those payments has definitely become the norm. I think as small businesses start their own business, invest so much time in getting new customers for their business to be a success, what's often overlooked is getting paid or not, as the case may be. So it's, and as we know, that's one of the biggest threats to the survival of the smaller business. As I mentioned earlier, larger businesses already tend to offer the customers a choice around how they accept payment to reduce that impact of late payments. So, for example, they might have an online checkout experience already, offering goods and services, as I mentioned earlier, via subscription. They'll also have resource to operate a call centre. And it's likely that the larger businesses use already direct debit cards, giving them that control. But as I mentioned, don't think the smaller businesses, and I think Charlie, you touched on it earlier, don't actually realise that those methods are actually available to them. So looking at direct debit as an example, small businesses tend to approach the bank in the first instance around accepting direct debit, only to find out that they've either not got the required balance sheet or trading history to be supported. So that option is then often ruled out, I think, by smaller businesses, and aware that there are BACS facilities management providers out there that can exist and provide the required sponsorship into the BACS scheme. So I think it's probably the education around what is available to them.
Okay, that makes a lot of sense. But in terms of, I mean, we did talk about the supply chain, we did talk about the domino effect, but what about that punitive measures? Like Charlie, you mentioned sometimes you have to hold customers that default or pay late accountable. So what are some ways that small businesses can do that? Charlie?
Oh, sorry. Was that question to me?
Oh, specifically because you mentioned how sometimes if someone defaults or they're delaying payments, we need to also approach it from a more, not punitive, but perhaps take a harsher stance. How can a small business do that with a larger client?
I think it's just something that we've been used to and always felt that we've got to give, sort of longer payment terms. And often smaller businesses are frightened to get onto a bigger business in case they lose the contract. But if they have it sort of, that's the law kind of thing, I think it's time now we've got to change the law in the way businesses operate. And, like as I said, we changed our payment situation back in the early 90s and had no option. We would not be in business today if we continued to give credit to all our customers. And, I've noticed more and more when you're ordering something now, businesses want, a larger percentage of what you're ordering. One time it used to just be a 10%, but now they're, 50, 70% of the payment. And even some people are saying to us these days to make full payment before you, or as you order the stuff. And, I just feel that's where we've got to go down. And with all this electronic banking and all the BACS payments and that, it makes it so much easier now that, you can literally order something now, get a transfer from your bank and make that payment. And I think that if all businesses can adopt that approach, then the knock-on effect will just keep things moving around, because, if we don't change things, then I'm afraid to say so many more businesses are going to continue to suffer and possibly not survive, the way that things are going to change.
I think this leads on to our next question, actually, because it's quite linked, which is how can small businesses get paid on time? Because we talked about the issue, we talked about what could be done, but I think from a more hands-on approach, perhaps you could kick this topic off, John. What would you recommend small businesses do to come down hard if need be?
I think that there's so many ways you can play this. I think there's two things I'd highlight from my experience and going back to the retail scene. Number one is you can negotiate with where we could at any rate. I mean, there's lots going on in the soup days. People were going out of business because they weren't getting good payment terms. And of course, the retailers have a cash business. They get paid immediately when they sell stuff. We go to the shop and we buy stuff with cash or a credit card, same thing. So they had the cash available, and it took a lot of pressure to get them to release that. But we negotiated. We said, look, instead of 21 days, can you just pay us in 10 days and we'll give you X% off our discount? We'll give off our invoice, excuse me. We'll give you, whatever it is, a couple of % off in return for early payment. And for us, that was like gold dust because we were growing so quickly. And that was the working capital was a huge issue in terms of trying to keep supply. So I think you can, in certain cases, certain industries, you can negotiate with your supply base to say, let's actually ease that flow of money. Of course, we have to give them something for it. These days, many, they're much better. They're paying 7 days, 10 days for small businesses on a regular occurrence for the small guys, really small guys. The other thing I'd say, number two, is invoice discounting. Is circumvent the problem. It costs something, right? So typically you can draw down against your debtor book 80%, 85%, and then crack on with dealing with your business, and the other 15% comes in later, and somebody else manages it for you. You know, I think that's a real opportunity, and not all industries can do it. In our industry, we can, because, you know, the debtors are quite solid. Yeah, they're the big retailers. They're not going to go bust anytime soon. I mean, you know, I say that, you know, blithely, but I assume that's the case. Many things have changed in the last 6 weeks, which we never thought was possible. But, you know, I think generally speaking, that is the case. So I think that's what you could probably do. And the third thing I've been very quickly is outsource this. Outsource the whole thing. You know, I used to be a control freak and want to have control of finances in the business. But there are lots of businesses out there that do this much better than you do, frankly. You know, we used to make soup. Let's stick to making soup and building a brand. And Little Dish, the same. And find people who do this every day of the week. And they would manage your accounts and they will do the chasing for you, for a fee, of course. But for me, I found it to be a very valuable and very useful exercise. So they'd be the 2 or 3 things I'd say.
Thank you, John. And I can see Helen nodding away. Helen, specifically to John's point there, I guess working with an external company at this point where cash is tight, what is the case for that? I mean, obviously, John mentioned that if you could, for a fee, not have that headache of having to chase payments, maybe that's a trade-off you could make when the economy is in a healthier place. But what about in times of crisis?
Yeah, I think it is definitely weighing up where automation and technology and outsourcing can actually drive efficiencies. So saving man hours, allowing staff to focus on other business critical tasks, as John mentioned there. So it's not a case of all payment methods and all automation will work for everybody. There's no one size fits all. So I think, yes, embrace the methods, embrace the automation, but there will be that, well, how much am I outstanding? That potentially could be replaced by bringing in that automation. So it's considering what's right for the business. And just assessing those costs. It's not always just the cost of the outsource, it's how many hours can that actually save the business.
And I think that kind of brings us to your point as well, Charlie, about you know, kind of pushing the buttons when it comes to the big guys, because they can afford to take more of a hit. But when it comes to politely chasing payments, and you're dealing in a brave new world where staple retailers are going out of business and going into administration, how do you politely start that discussion? Like you mentioned, small businesses might be a bit intimidated by larger companies.
Look, you're totally right, and you know, I'm probably just saying it because of, you know, how we dealt with it back in the early 90s, and we had no option but to change our payment system. And you know, I've spoken to many businesses over the years that said, you know, it's easy for you to do it, and it's, you know, it's not so easy for us. But I just think that what is the option kind of thing. But I feel that, you know, if we could make it law that you know, that people can't, you know, take so long to pay us kind of thing. You know, this 30-day business is old fashioned. I mean, maybe that's got to be moved to 7 days. There's no reason why the businesses that have the money can't make the payment. And I just feel that smaller businesses have really got to lay out their terms of business and hopefully negotiate with, as John said, with the customer that this is how I can trade kind of thing. I don't think it's a case of, you know, threatening them or having any leverage, but I just feel that it's a changing market out there, and many businesses will, I think, be adapting a different payment system now, because if it carries on, there's no way that we can carry on in business like this. And like, rightly, as I said, Pimlico Plumbers would not be in business today if we didn't change our payment strategy to payment on completion. And I just feel, you know, it's probably easier to say to do, but you know, you've got to start somewhere. And I think it would be good if perhaps the government could encourage businesses that this is, you know, what the payment terms are now, change them. And rightly, as John said, or I mentioned earlier, is give businesses an incentive for early payment. And I think that would encourage a bit. But it's not going to be easy. I mean, you know, nothing in business is easy. But I think, you know, we're a nation that sort of, you know, get through things and we carry on and we keep battling away. And I feel that there's major changes going to happen in businesses, and now is the ideal time that you can renegotiate your terms with a customer.
I think it's true. There are so many beautiful stories out there of landlords waiving tenants' rent, or, you know, people sort of giving you longer terms to pay things back. So maybe this pandemic is a time for people to reassess their humanity in a way as well. The last topic, that's it. Strategies to stay cash flow positive. You've all mentioned your tips and tricks and what businesses can do right now, but I thought this would be a nice way to also have, I guess, closing thoughts on the topic before we go into the Q&A. So Helen, was there specific strategies that you would recommend to our viewers?
Again, I think it is doing research. Go out, see what tools are available. Could you look to automate invoices and the payment process? Perhaps you maybe want to track invoices. Have they even been delivered, open and read? There's so much technology out there, but it is, again, what works for one business won't necessarily work for all. I mean, we are seeing the trend of those smaller businesses wanting to implement online self-service, wanting to optimize the payment and collection strategy, and it is doing that research, see what's out there, and then it is that cost weigh up between what you're currently paying in terms of man hours potentially that could address those late payment issues.
And John, is there anything you'd like to share?
Yeah, I mean, I think this is the crux of it, really, and a lot of it's been spoken about already. But you know, I think there's two sides to this coin. One is keep what you've got from a cash point of view, and the other is getting what you're owed from a cash point of view. I mean, it's as simple as that, really. And what do those strategies mean? I mean, I think you can do a number of things in terms of keep what you've got. You know, to stop paying as much as you had been before. In other words, reduce costs. But in terms of commitments you've made, you know, categorize your creditors to see which ones are critical to your business that you absolutely have to keep going with. And then see which ones, as Charlie was saying, see which ones you can negotiate with to push things back, or see which ones you can stop paying. I mean, that the HMRC have been saying stop paying us, frankly, for the moment, if that helps. Of course it'll help. But if you have existing loans with banks, see if you can negotiate it so you're only paying the interest, or you're only paying the capital, or you're delaying the thing for 3 months and you stick it on the end of the term. There are lots of things you can do to get us through this really crunched period. But the point about it, if you're going to make changes, back to the domino effect, communicate those changes, negotiate them. Don't just do them and say, well, I've decided, so everybody has to, you know, figure out around me. Communicate that with whoever you're dealing with. To say, this is a renegotiated payment plan that I want to implement. I absolutely have to do this. If I don't, I'll go bust. You know, does it work for you? Or, you know, figure it out. So over communicate. And on the other side is get in what you're owed. We touched on this already. But you know, it's amazing the number of old debtors you have on your book if you're not managing carefully. So manage it really, really carefully, and look out for bad debts. It's a bit late now because we're up against it. But you know, frankly, I'm taking this the right way. But you know, as Charlie said, lay out your terms, and if people aren't adhering to them, hold their feet to the fire. Frankly, you know, at the end of the day, be that pain in the ass that says, you know, I am going to chase down this debt. It's over 30 days if that's the term, and chase it down. Because you know what happens when we get into the situation, you know, we've all done it ourselves. We have to think, okay, you know, I'm gonna play God here. I'm gonna not pay them and pay them. And if you're suddenly thinking, okay, these guys are tame, they're going to be on our case. They're on our case already, never mind. So I better pay them. You know, it pays off. Become known as the one that always chases payment. It's very much a historical and an attitudinal thing, you know, and I see it across different countries. In the UK and in Ireland, we're hopeless at it. We kind of think, oh, it's just the way it is. In Germany, you wouldn't get away with it. In Germany, they jump down your throat and say, hang on, you agreed to pay and you haven't paid. What are you doing? And you get a bad name. So it's very much attitudinal, and I think we just have to stop accepting the fact that, oh, it's the way it is and everybody does their best. Well, their best isn't good enough, and maybe mine isn't either. And what did I actually agree to? And let's absolutely deliver on it. That's one piece of it, a big piece of it.
That's fascinating. Charlie, is there something you'd like to add as well about the strategies?
Sorry, was that to me?
Yes.
Oh, I didn't hear you. What was it?
Oh, sorry, I was just asking about your thoughts, especially following John's strategies, the attitudinal shift that we all need to sort of take in chasing payments. What are your top tips in closing thoughts about this topic?
Well, I'll probably, if I can hear you properly, I'm not exactly sure, but I'm going to go back to what I'm saying. I think that we've got to change our payment terms, and maybe the government have got to step in and maybe implement new payment terms to make it a lot easier for businesses to negotiate, so that, you know, you're not out on your own doing it. You know, maybe the government have got to come in and say, look, as from now on, anybody trading up to, you know, a certain figure or invoicing for a certain figure, that payment term has got to be within 7 days, or stage payments and bigger deposits. There's no reason why the government can't sort of implement something like that.
That's a really good point. And actually in the chat box as well, one of the viewers, Mike Russell, says, big corporates dictate the contract terms, so it is never a two-way negotiation. Agree with Charlie that this is where legislation can step in. But we did have a bout where the Small Business Commissioner had their late payments, so many measures to tackle late payments. And even now, the Small Business Commissioner is always taking complaints and assessing where they can hold big business accountable. But I guess there's that shift between the naming and shaming aspect of things, and also rewarding and incentivizing payments. Are there any thoughts on that between the two approaches, or are we looking at a combined approach? And how much can a small business do? John, do you have any thoughts on that?
I think a problem like this always has multiple reasons and sources of the problem, and therefore we need multiple solutions or parts of the solution. So we do definitely need legislation. Charlie's right about that, and there's an example of how that happened in my industry with GSCOP, GSCOP. Don't ask me what it stands for, but it's, you know, it's known in the retail industry and the way we work in terms of, you know, trying to level the playing field, given that the major retailers have so much power. And there are lots of, it's not just payment terms, but that's a key part of it, because in the 80s, 90s, small businesses were going bust left, right, and center. Now, all that has been accelerated now. I mean, the thing about this pandemic is it's not just global, and it's not just a switch of business fortunes, but it's happened overnight. So all these things have been accelerated right up to the point we're in. So, you know, legislation is going to have to come after we've learned some stuff from this, right? It's not going to change anything now. So I think what we need to do is take, you know, be masters of our own destiny to the extent that we can. But your caller was right. You know, the power is still with the large corporates. So, you know, set out your stall, like Charlie said. You know, negotiate as much as you possibly can. Try to hold them to it. Offset your risk by doing invoice discounting if you can. And just be a terrier at chasing people down and make life more uncomfortable for them, that the people who aren't paying you. And then hopefully, you know, legislation will follow to make life easier for all of us.
Mm-hmm. I see there's a chat going. It's the same time as the Q&A box. So we've got 4 questions that are open, and we have a couple of points in the chats as well. There's one addressed to you, Charlie, from John DeCunha. I hope I'm pronouncing that okay. Has Charlie ever turned away new business when a customer asks for longer payment terms? Have you?
Say that again, how long what, sorry?
Have you turned away new business when a customer asks for longer payment terms?
Yes, we have, yes.
If so,
yes.
Are other customers losing out on new business by doing that?
Well, I mean, you can't please every customer, and I think you have to weigh it up, that, you know, the amount you lose and the amount you gain. But this day and age, we don't lose customers for saying that our terms of payment on completion. But certainly back in the early 90s, it was a bit of a shock to people to have to pay straight away. But, you know, I think, you know, people have adapted now, and, you know, quite a lot of people are used to this payment straight away or after the work. So, you know, yes, you will lose customers to start with, but, you know, I think it's something that if it's a difference of you surviving your business, then you have to make them changes. And, you know, I believe that you know, certain businesses will come to the front where they've got known as making direct payment. You know, say we had like a credit rating for businesses that pay promptly, you know, in a different colour code, for argument's sake, well then, you know, more and more businesses would want to get that top colour code so that people use them. So I think that, you know, we can encourage businesses to to actually pay promptly, knowing that they're going to get more business from it. And I think that the fact that, you know, you can't please every customer and you can't have every customer, you know, so if your customer says, I'm going to go somewhere else because of your payment terms, then I'm afraid I think you just have to accept that and concentrate on the ones that are happy to pay you. And, you know, again, go back to what I'm saying, maybe they get a prompt discount for payment.
That's really fascinating. Almost like changing the game with a credit rating for companies, holding them more accountable.
That's what I'm saying. I think that could be a great idea because, you know, I certainly would use a company myself if it had a credit rating that they paid, you know, guaranteed within 3 days or something, you know, and I think a lot of businesses would also do that. And I just feel that, you know, I think there's just got to be big changes out there. And rightly, as your caller's right in saying, you know, what about if I'm going to lose customers? But, you know, I'm sure Helen and John know that, you know, you can't please everybody. But I think if we're all drinking from the same teapot on payment terms, then, you know, they'll go with it kind of thing.
And that's actually a really, there's a follow-up question here actually about, I guess we'll open up to the whole panel. What would you do when it comes to bridging that cash flow question? The question here specifically is asking about invoice financing. Would you consider invoice financing as a way to win new business?
Is that to me again?
It's to, I guess, John and Charlie and
John?
It kind of depends on what industry you're in. I think there's no one size fits all here. I mean, you know, the businesses I've been involved with, you know, discreetly different from Charlie's business, for example. And you can imagine all sorts of, you know, business, that word covers a multitude. So one, you know, there's not a one size fits all. I'm not sure how invoice discounting necessarily could be a way to win new business, but when you have the new business, it can certainly manage your cash flow, allow you to manage your cash flow a lot better. It's a tool which costs something, of course, nothing's for free, but it's a tool that allows you to manage your working capital. And it's equally relevant in a pandemic crisis like we are now, when people's revenue is going like this, to when you're in growth mode and your revenue is going like that. It's exactly the same problem you've got in terms of managing your cash for different reasons. So either way, I think it's a great crutch to rely upon. If your debtors are strong debtors, if your business that they're doing business with are you know have a very low risk of going out of business, then you'll get your 85% from any bank, any high street bank. And there are others as well. More recently, it was just that the high street banks offered this, but there are many financial institutions or money lenders or institutions where you can get very good competitive terms on invoice discounting. Listen, it's not the only tool in the toolbox, but I've relied on it heavily as we were going through growth, and all those businesses that I mentioned. A lot of the businesses that I'm involved with these days have it almost as default. But it works in this industry, like I said at the beginning, a lot better than perhaps others.
The question also raises another element. This is from Zafar Ali saying, the dialogue seems to be around credit offered and collection, which is true. The focus of this discussion was on late payments and how to manage the existing cash flow. And he'd like to know, how about managing cash flow in terms of, and again, now to read between the lines here, I'm guessing and Zafar, if you're out there, if you could perhaps clarify your question, would help us. But I think he'd like to know, how do you actually manage the P&L on a daily basis when there's so many uncertainties? Helen, would you like to take this question?
I mean, from my perspective and how I've, or certainly the feedback I have from smaller businesses around actually managing cash flow, again, comes back to what I was saying earlier around giving as much choice to customers. And I appreciate Charlie spoke about specific payment terms, but by offering some of the alternative payment methods, puts the organisation or the smaller business in control. So as an example, by a payment method and a payment term being payments are direct debit, it puts the organisation more in control over when and how much the organisation is getting paid, which has got to help cash flow, as opposed to relying on some of the sort of kickbacks methods where it's back over to the customer, that then puts that control back in their hands over when they're going to pay you. So I think certainly from my involvement with smaller businesses, direct debit is normally the way that customers want to really get a good handle over their cash flow.
Okay, and okay, so Zafar did clarify his question. He's saying that his concern is more around the timing, because planning and managing your cash flow becomes difficult when you don't necessarily know when the payment will come through. So he says cash refers to cash rather than credit cards, which can take about 7 days to come through the bank. And Visa debit takes 2 to 3 days. So I guess it's all about that time management piece. Would you like to comment on that, John? I can see you nodding.
Yeah, I mean, no matter what the business is like, you have to have a cash flow forecast. Look, it could be done on the back of a piece of A4, or it can be a very sophisticated spreadsheet, or it can be driven off an even more sophisticated piece of software. But at the end of the day, it's all based on assumptions. And you know, your cash flow forecast will be good or bad or accurate, maybe it's a better way to put it, depending on how good your assumptions are. And the problem we've got right now is all our assumptions have been thrown out the window, because we had a business, we had history, we knew what we were going to do next. You know, we had trends, and we had experience, and we were relying on that to model our cash going forward. And literally overnight, the rug was pulled from under businesses, depending on your route to market. You know, some businesses have been doing really well, others have pivoted, so they weren't doing well and they are doing well now, and others are really struggling because the revenue tap has been turned off. So you know, there's all sorts of weird things going on, which you used to be able to rely upon in the past. So it's really quite a try to fill your model with new assumptions, and that's a bit of guesswork. You know, I can't tell you any other way. I mean, how are we going to figure this out? So you have to kind of, you know, I think the bigger picture here is probably from an entrepreneurial point of view. If I can just swing the conversation slightly that way, because you know, people who set up their own business. You know, Charlie's a classic entrepreneur. You know, you go out into the wide open, not really knowing what you're doing and not really knowing what's going to happen, and you make things work, and you react to the good and the bad. And now we've got a lot of bad, and I think you have to try and figure out what this new normal is going to look like when we get out of this situation, and fix your business to cope with the new normal. And in the meantime, which is what we're talking about mostly today, is to squeeze that cash as much as you possibly can. So figure out where the worst scenarios, what you know, the worst type of situation would be, and plan for that, and hope for something better, and just reduce down your outgoings as much as you possibly can in terms of your P&L, and do it on a microscopic basis. If you have to, do it on a daily basis, because this is, you know, this is the difference between success and failure, really, on such a very rapid reduction of revenue scenario. And of course, we don't really have a clear road plan from the government yet when different industries can begin to get back to that sort of normality. But once we get that, we can add that clarity into our assumption base as well. But you've got to open up your crystal ball and try to figure out on a weekly basis, certainly, how things are going to affect your ability to bring in cash. You can control an awful lot more how you send out cash. In other words, you know, keeping what you've got is more in your control. Getting in what you don't have yet is much more tricky. But you know your industry best, and you just kind of keep your eyes open and see what's changed around you in terms of your industry, and make up a new set of assumptions.
Okay, that does sound like like you said, some of it is guesswork. So it's knowing your industry, like you said. So that sounds really interesting. I'm just conscious of the time. We have 6 minutes left, but we have a lot of questions coming in, a lot of points. Personally, I think 2 of these questions are very interesting, so I'm going to throw it out there to everybody in the panel. And if there are any other questions, please keep sending them our way. We'll try to compile them and send them over to the panelists, and based on your availability and time, perhaps you can answer them later on. This is really fascinating. One question comes in saying, sounds like a great opportunity to create a rewards program to incentivize early payment. So what do you think of that piece about incentivizing early payments from customers and clients and turning it into perhaps a loyalty scheme? Is there scope for that, or is that something unexplored? it's open for whoever would like to comment.
I think it's you know, I think we've touched on it already, and I think different industries will need to have different approaches to it. But you know, frankly, you can bake the cost in of whatever you think it's going to, you have to get a giveaway into the cost of your product. So you're coming out with no, you know, with a zero sum game. So you can definitely do that. But in times of crisis, it's worth getting a little bit away to be able to ease the actual flow of cost. So I think even if you haven't got it set up in your terms and conditions, you could probably go back to customers where you have money outstanding and say, on this particular invoice, I could do you a deal. You know, I could take. It depends what your own margins are in your business. If your margins are very, very tight, guess what? You got less scope. But if you have a bit of margin, and really it's not so much the issue today what your margin is, it's more what your cash position is. So give a little bit of that margin away in return for getting the cash in tomorrow. Yeah, that was a good reactionary situation. But I think your question was more long term in terms of, you know, some sort of scheme yeah, absolutely, some sort of loyalty bonus. But bake the cost into your margin in the first place, because otherwise you're just gonna you know, end up with a lower margin business long term, and that's not what you want either.
Charlie, would you like to add anything to that, or shall we move to our last question?
Can I just add something to that, which I thought was great, as you say, giving customers an incentive. The other thing could be, obviously, I think, as you say, different businesses would have to do different discounts depending what their margin is. But maybe there's another one that, you know, if they pay promptly, they get a certain amount off of the next invoice. You know, I think you know yourself, you know, what we should be doing with businesses is give them incentives rather than penalise them. Mm. And, you know, I think, you know, probably as you said it there, John, every business is different. And it just may be that you can offer sort of £50 off the invoice, or 5% or something, or something off, you know, the next invoice or the next job that gets done. And maybe that may catch on.
Mm-hmm.
That's a smart move, because it keeps bringing customers back to you. That's a great idea.
Yeah. Well, if I could just add something there, we do probably 2,000 to 3,000 jobs a week when things are good, and between 70 and 80% of that is return customer. Mm-hmm. And you know, I'm not telling you guys anything, but you know, the best way to build up a business is to work on customers and retaining customers. And you know, I don't know if that really helps on what I'm saying here, but you know, certainly to retain a customer, I believe, is a guarantee of having a successful business.
And I think one of the keys in the current climate as well is communication, by being proactive, talking to customers, not just looking for obviously their next order, but discussing, are they able to pay on time, having those conversations. And I think the personal touch then will go a long way.
Well, that sounds like a really nice way to wrap up as well. We're nearing the end of the hour. Are there any other closing thoughts you'd like to say to everyone online today?
Listen, I'll leave one closing thought is that, you know, there's been a lot of talk about what the government can do and what government role is, and I think they've been quite remarkable. You know, who would have thought the government would be, well, a Conservative government at that, would be dishing out handouts like they have. And of course they've needed to. They've actually absolutely needed to. Haven't had a choice. And they've shown lots of initiative, and some of the programs they've introduced haven't quite worked, typically because, you know, the government isn't designed to shell out money that quickly, and banks have kind of got in the way a bit. Let's not go down that road. But ultimately, you know, the government doesn't run our business. We run our own businesses, and we have to step up. And I think it's worth just making the point that you know, yes, we need help, and yes, we didn't deserve this, and yes, it's very unfair. There's no question. But actually, you know, there's a lot of situations, not quite on this huge pandemic scale, but there's, you know, Charlie mentioned a couple of recessions that he's lived through, and I have as well. And you know, we have to roll with the punches here, and we have to find ways to deal with it, and we have to step up, and we have to take responsibility for our own business dynamics and our own business future. And I think entrepreneurs do this all the time, but business leaders tend to do it as well. We just have to find ways out of this and you know, stick together like we have been. But ultimately, we need to look for, I mentioned it earlier, this you know, green hill over there, which is hopefully when we come out of this, whenever it will be. It'll be different though than it was before. It'll be a new normal, and I think if we can try to predict what's going to be new about it, then businesses who do that well are going to be in pole position to kick off and really drive forward, because it'll never be the same as it was before, much as we might like to think it will. You know, we've had some good times the last couple of years. You know, adversity has been here as well. So you know, we have had ups and downs. This is a huge down. Whether it's a V curve or a U curve, and you know, we can listen to the experts figure that one out. But we need to be ready for when we can climb back into the saddle. And I think it's figuring out what's going to be different for our industry, for our business, for our company, for all the individuals, for our customers, and be ahead of the curve. It's all about having a competitive advantage. You don't have to be the best in the world. You just have to be better than your competitors. And I think you're doing well.
Thank you very much, John. Anything else to add, Charlie, before we go?
Yeah, I mean, I'm going to sort of, I think, agreeing with what John was saying there, because my take on it is that, like with the recessions in the past, if a business gets through it, then you'll come out as a better business, and you'll hopefully strive on to make your business even better. That's, I think, was what you was more or less saying, John, on it. You know, once you've gone through this experience, I mean, I know we've never experienced this situation before, and probably the nearest thing I could say is a recession to it, but a recession is easy to what it is at the moment. But certainly a business will come out stronger the other side if we get through this. I'm convinced of that. And some businesses are going to strive on to be even more powerful and better than what they are before this happened. Yeah. So there's sort of hope out there, and I think that there's a future out there for all the businesses that who can carry on and survive it.
All right. Well, thank you very much for those inspiring words. Helen, was there anything else you'd like to add?
Yeah, I mean, there's some really great insights there, and I think we obviously will come out of the other side. I think I'd go back to my earlier comment around research in terms of automation, technology, provide as much choice as you can for customers to pay, which will obviously help with cash flow.
Well, thank you very much for your time. Thank you for tuning in as well to everyone who's watching this. This video recording will be available for you to watch later on, as will content around this piece and this topic, which we'll be diving much deeply into on Real Business. So thank you for joining us this morning, and all the best. Take care. Thank you for your time.
Thanks for organizing. Bye-bye.
Thank you. Thanks very much. Thank you.
Thank you.